Hello traders, if you are new to this channel, I'm Akamle Forex and I'll be giving you a weekly forecast on gold in this video. So you need to stay connected to the end of this video. Imagine you literally predict what price is going to do on this particular week. This particular week, what price is likely to do. So as a day trader, you literally need to know what price is going to do or price is likely to do on this particular new coming week so that you go stay informed in the market. You literally know what you are going to do. Either you are going to be buying or you are going to be selling. You need to prepare yourself on that before anything happens, right? So we just look at this particular trade or this chart on the daily time frame. So in the daily time frame, as a day trader, I start my analysis on a daily time frame to 4H, 1H, and 15 or 5 minutes to take trades, right? So you can also literally start your analysis on 4H time frame to 1 hour to 15 minutes to take your trades, right? So let's see here in this daily time frame. So in overall structure, we can say gold is what is bullish. So gold is bullish, and then there's the what we are seeing here on this particular price action here. You can see price is giving us a retracement around this level, and this retracement it is currently on this other block that we have here. We have another block here. The last selling candle before that pushed on upside, and that is our bullish order block. So currently we have price at this level. Then don't forget we also have another one here. We have a shift in market structure here. We have a shift in market structure beneath here, right? In the daily time frame, then we have this price breaking at this level on the daily time frame as well. So we have a break of structure, a major break of structure at this level, right? So and then we also have this as a fair value gap on this level. So this is it here, right? So you have a fair value gap here. So looking at these levels, price has given this breakout structure here, right? So based on ICT or according to an ICT, shout out to ICT. So according to him, three or more or four or more candles that close below each other is a validated retracement, or that close above each other. So in an uptrend, the one that closes beneath, as you can see, this candle close beneath here, the other one close beneath it. So this is the three candles. So that give us what, a retracement. So this is a validated retracement. So currently you can see where price is. So since price is retracing, we'll be expecting to see price to either tap from where it is. We found our lower time frame market structure shift to take their buy to this level, or price comes to respect this particular fair value gap and move. But a new structure is formed here, so our focus should be on this particular zone. So if this zone is violated, then we will now come to this particular zone as well. So now where price is currently is in the daily time frame, if price give us a market structure shift here in the lower time frame, we should be looking forward to buy to get a buy from here, to get a buy up to price taking this particular high here, come to that draw on liquidity. Anytime price is moving, price target liquidity, so price comes here and then up to the draw on liquidity here. So we are not a swing traders or a position trader. We are just a day trader, so we don't make our final decisions on the daily time frame, right? So we just move to what, to the 4 hour time frame to see what price is literally doing in the 4 hour time frame. So in the 4 hour time frame here, you can literally see what price is doing here. So let me just take off this particular zone here. In the 4 hour time frame, you can see when price give us this break of structure, we have this particular structure to as well here that price has taken, giving us a sweep in market structure here. That means that price just take the liquidity, draw on liquidity, take that liquidity um, below that level, above that level. Then after taking that liquidity, we have a market structure shift. Price give us a market structure shift here. So we have a market structure shift that is giving us a structure shift to the what, to the downside. After that market structure shift, we have price what, price giving us this particular structure break to as well. We have a break of what, a break of structure to the downside. So when price give us this break of structure, it traded into a, what, an institutional reference point. That's a daily institutional reference point, which is this particular zone we have here. So let me name this break of structure. So price traded into this particular level here that we have here. This is our fair value, our order block around this level where price has traded into, and then we'll be expecting to see price giving us a change of pattern at this level. So we just move straight forward to the 1 hour time frame. So in the 1 hour time frame, you can literally see after price giving us this displacement, we have this particular displacement here. This displacement is also known as what, as a liquidity void, right? It's known, also known as a liquidity void because we have more than what, more than one fair value gap here. We have this our fair value gap. We have our second fair value gap here, second fair value gap. Then we have our third fair value gap, our third fair value gap here. So with all these fair value gaps that we have, there's only one fair value gap that we are going to make use of, not all the three. So we are making use of the top fair value gap that we have here. The fair value gap we have at the top here, which is this particular one. So these ones, we don't need this one, we don't need this one too as well. So this is the fair value gap that we're expecting to see. So in this case, you can literally see that this area, we now see price, we are now be expecting price to buy. So price to give us a buy to that zone. Because as a day trader, you need to be targeting the short term movement, not the long term movement. You need to see price buy to this level. So if price bought to this particular level and then we have any other structure shift to this level, maybe price will now be taken from this short to the downside to draw on liquidity or to come and give us a retest at this level before giving us the major buy. So these are the things that we're expecting to see price to do, right? So now we move to the lower time frame, which is going to be our confirmation time frame. 1 hour time frame is just a mid time frame where we draw our point of interest is and where we want price to trade into. So if we move to the 15 minutes time frame, we move to the 15-minute time frame, we'll now be looking to see price to give us a market structure shift in this particular zone here that we have here because we are looking to buy. So we look to see a confirmation entrance which is going to give us a market structure shift. So in this case, we have price giving us this structure. We have this price having closed above this level. So we need to see a candle to close above this level. In this case, we just have a sweep, a market structure shift. So you just sweep that high, but we want to see price to give us a candle to close above this level to confirm that what, to confirm the market structure shift. So after price, if price confirm this market structure shift, then we will now use this order block here. We have this order block or this institutional reference point. This fair value gap here. We have a fair value gap here. As our point of interest again, where we were expecting price to trade into, then we take the buy. So if price trade into this, so this is what we are going to do. Price give us this market structure shift. Just wait for price to give you a retracement to either this particular one or that one. So if price trade into this one, then we are taking a buy from here to this particular one, this particular point of interest in the 1 hour time frame. So we take a buy here. So you get the confirmation, we take a buy. If you take a buy, your Excel should just be beneath the structure, beneath this particular low. Beneath this particular low here should be your Excel. Then you target the high, target this particular point. So on gold, this is what we are looking forward to see gold to happen after price open to happen this week. So this particular week, we need to be looking for more of bias. If we have what we have this market structure shift. If we have a market structure shift and then price got to this level, and then we have a continuation after price start getting to this level, then we should be looking for more of bias on gold. But if price tap into this particular level, right? Price tap into this particular level and give us a market structure shift back to the downside. So we should look forward to see either price to come back to retest this level and buy to an upside, giving us the major buy, or price break this level to give us a sell to the fair value gap that is beneath there in the daily time frame. Then that's what we are now going to do. But without that, this is what we are looking for to see price to happen on gold. So let's stay focused and then take this trade. Don't take it blindly. Just wait to see all these confirmations to happen before you take a trade. So currently we can see that price has opened here. Price just opened with a gap just right now. Price opened with a gap. So anything can happen. See price just opened with a gap. So price can either trade into this or that. Then we take market higher. We take the position higher from there. But if price break this particular level, giving us a break of structure here, then we have we will look forward to see price short to the downside. So this is what we are expecting. But let's see what price will do after this. So I'm a Camilo Forex logging out.